Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of it should be relied upon as any form of personal advice at all. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It is just general in nature only. I have been watching very closely Dixie. I think it's been an amazing movement that's been going on inside it for the last sort of 4 to 6 weeks. The continued downtrend has been interesting considering how good US data has been, and it is down to Fed speak. It's certainly something I've been quite prominent on over the last 3 to 4 weeks, but basically the back of the last week of May, moving into the first week of June, it slowed right down. And mainly it was because Fed speak just might be, starting to lose the ability to hold a lid on the idea that inflation is coming. And I really need to highlight data out of the US now that I thought was going to be here faster than where it's already come, to really start possibly pushing what has been a very flat period in the last 2 weeks inside pairs that may actually start to see some dollar upside. Non-farm payrolls are key, and I understand that. I am filming this on Friday, so I do understand I haven't got them. But the data that mattered that really caught my attention were the Services PMIs and ADP payrolls. Let's go through them because I think they're really important, particularly considering that this Services PMIs, where you look at the ISM or the Markit numbers, they were at records and they were incredibly strong. Look at restocking and look at hiring. Hiring was incredibly high, 74 and 78 respectively across the two of them. That is really strong. If you look at pricing as well, also at records or near enough to the 2005 record inside those PMI figures, that screams inflation. And I think you can't write that off. This is then backed up by what you saw with the ADP numbers for their payrolls. They were also incredibly strong, just shy of 1 million, around about 972,000 jobs added. Now, April was downgraded. That goes hand in hand with what we saw with the non-farm payrolls, and that's what you would expect. But that jump up in May shows that the data and the robust recovery that's going on in the US is real. And no matter how much they talk about, not now to talk about with tapering, not now with rates, it's going to get louder and louder, and there will come a point where the data should, in theory, overwhelm Fed speak. Don't get me wrong, I understand that they're going to probably hold the line for longer than the market expects. Don't get me wrong, I also think that they're going to keep talking it down, and therefore a rise in the US dollar might get bumped by seeing somebody like Richard Carita. I think is actually an interesting one considering his neutral points, or even to say Jay Powell comes out and really stamps down on it in the June and also the July meetings. But overall, data's good, and data is real good. And I think if you look, and let's start with this, Euro dollar finally looks like maybe has got out of this idea of going to 123. It had really gone higher than I even expected at 122, 122.7, back in the 121s, and positive data should finally drive that US dollar up. Cable's a little bit different. I think you can leave that to one side. There is more stories there going on in the pound rather than actually in the pair, and that's part of why it's a little bit muddled. Look also at dollar yen. Dollar yen is again now showing just that sign of finally breaking out of a range of 108 to 109, and maybe it could go back on its merry way towards 110. But the one I do really need to highlight with this story, and where you're starting to see that weakness across other currencies and back towards that real growth story that is the US, is Aussie US. The Aussie last week had every reason to test and probably go through 78 cents. The GDP figures last week were very good. If you have a look at retail sales, also very strong. Same with the trade balance. Iron ore back above 200 US dollars an ounce, a ton, apologies. Yet it just wasn't even entertaining 78 cents. And very quickly, as US data came out, it was overwhelmed through 77, back into 76. And it was the top two weakest in the pairs, the Kiwi being the other. And that, I think, shows you very clearly that this is a story that is now about the US dollar. And the more and more we go along with it, and the more and more US data comes out, it is just going to overwhelm the last 6 weeks trend.